All right. Hey, everyone. Back to the old time, 12:30. Welcome, everyone, to the Tuesday live stream. Hope everyone's doing well. I know it's a bit of an interesting day in markets, a bit of an interesting week in markets. Yeah. But there's always, a reason to look forward. There's always a reason to be bullish, optimistic, and positive. Prices can't go up every single day, every single week, every single month, every single year. There's always ups and downs. There's always ups and downs in the market. So today, let's talk about what's going on because people are, yeah, people are grumpy. People are grumpy. That's the sense I get from reading sentiment, whether it be comments, whether it be social media. People are grumpy. People are grumpy. They're not happy. But look, folks, it's a period of change. There's a lot going on in the world. And we, of course, are in this time when everything is always interpreted from the worst extreme in the world. I'm not going to deal with that. I'm going to talk about markets. I'm going to talk about what I see going forward and where I am bullish, where I am optimistic, where I am positive. And there's still, an enormous amount of money to be made because in the end, why have I been so bullish, so optimistic, so positive through this horrific crash that we went through in 2021 till about 2023? You know what? Because when you look around and you look at the incredible new innovations, machines, technologies, services, how can you not be bullish? How can you not be bullish? We've got all these extraordinary, unbelievable, amazing inventions, innovations, technology, serve products and services that are magic, even relative to my lifetime. I mean, who could ever have imagined that we would actually be, after 50 years of just dreaming about AI is here. I use it pretty much all the time. I was on Grok and then ChatGPT and Claude, just testing out different things as hey, well, what's going on in Europe? What's the historical comparison? And AI would do it for me. You know how long that would take me? Prior to AI, I'd have to go find all these papers, go and read what these papers said, look at the 13 different interpretations. Instead, AI did it in 2 seconds, in 2 seconds. And so I had all my historical comparisons. I had some data, I had some information on which I now, of course, have going to use, what human beings are best at, which is what? Using our creativity, using our imagination, using our intuition to come up with insights. And that's just one of I don't know, I can reel off 20 things. 3D printing, eVTOLs. There's just so much. So, hey, my point in coming on, number one, besides, rocking this blue and gold scarf, and, matching pocket square too, say don't get down, folks. Don't get down. Don't get down. Yeah. It is completely normal in markets to have ups and downs, ups and downs, ups and downs. Some of you I know are in a big hurry, want to make a lot of money. And you know what? Truthfully, I don't know if I have a lot that I can do to help you, but I do have this one thing that I really want to share with you. And I'm going to do a bald man speculating podcast on this because it is something that is deeply misunderstood or not even understood, I'll say, which is that the markets, right, are a daily auction. I'm just going to repeat that, right? The markets are a daily auction. I'm going to be a real jerk here and repeat it for a third time. The markets are a daily auction. And now I'm going to add one more thing to this, run by the dealers. Okay, I'm going to put all of that together and say markets are a daily auction run by the dealers. In other words, the people who run the markets are the ones that you buy and sell from, and they can choose to buy and sell themselves for their own account, right? So in other words, we're dealing with like a marketplace that is, yeah, I mean, by construction, it's got some issues. Number one, it's an auction. So, this is why, like, people look at yesterday's price and they think, like, well, why is the price down 10%? Because it's a daily auction. And today, large numbers of people came to the auction, be like, get me out, I'm out, I want out. Sell everything. And the dealers will offer you some price, or if they don't really like where the market is yet, they just will step away and let the prices fall, let the market find itself. Daily auction, folks, run by the dealers, right? So you can like it, you can dislike it, you can agree with it, you can disagree with it, you can think it's manipulation, you can think it's rigged, whatever it is, for better and for worse, it is what it is. And we can still make money. But I do want you to understand that every day when you wake up and you have this idea in your head that today is a continuation of yesterday, you are wrong, because it is a brand new day and a brand new auction. It's a brand new day and a brand new auction where there are new sellers, new buyers, but the dealer is always there, and deciding if they want to intervene for themselves, intervene maybe for one of their clients. Yeah, they sit there all the time, and the rules are in their favor. They have more information, and which is why, short term, it's pretty much impossible to beat the dealer. All right, but just, hey, that's my I try to put out like a one major thing that regular investors don't understand, don't account for. And so when you come every day, when a market is up, when a market is down, always think, put it on your desk, put it on your computer. A market is a daily auction run by the dealers, a daily auction. Yesterday's price has nothing to do with today's price because it's a brand new day with a new auction. Yes, you can use it as a guide, but you're not guaranteed to get it. And there should be no expectation that just because the price was up yesterday, it's going to be up today. If the price was down yesterday, it would be down today. All right. Okay. But enough generalities. I've given you my BOP pep talk for today. But let's talk some specifics. Let's talk about the crazy price action in Bitcoin and crypto over this weekend. How wild was that? I mean, what? We went from 78,000 to 95, back to 80, all in the space of like 48 hours. What would take maybe a year or maybe 5 years in the stock markets happens like what? Yeah, in a half hour and a couple of hours in crypto. Gotta love it, right? Gotta love it. All right. Before I get into what's going on in crypto markets, we're going to cover that. What's going on in stock markets, we're going to cover that. Let's do all the really fun stuff that you love, which is the legal disclaimers and disclosures, which is that this live stream and the content from ATG Digital is not investment or financial advice. It is presented to you as opinion. Use it as information, engagement, entertainment, whatever you choose to do with it. It is your responsibility because it is your money. All right. Next, all ATG Digital content may contain errors, oversights, and mistakes. In other words, look, I do my work, but like it's not like perfect. Yeah, I mean, I can make errors and understand that investment operations have significant risks and can lead to the loss of your principal. Bottom line, You're not guaranteed to make money just because I've said something, because I've presented an opinion to you that is super bullish, super positive. You're not guaranteed to make money. Like, you still need to be mindful. As they like to say, at least in my time on Wall Street, you pays your monies, you takes your chances. That's right. You pays your monies, you takes your chances. Next, the owners, employees, contractors of ATG Digital own, trade, transact in the securities that are mentioned in this video and all content from ATG Digital. And if you dislike that, it's time for you to say, close this live stream off and get this man off my computer screen, or if you're watching it on your big television, push it away. All right. We do not take money from companies or crypto promoters and sponsors to recommend their stocks or crypto tokens. This is somehow become a widely accepted practice. People like me who are on social media now actively have clients that pay them, say, hey, you recommend this crypto, you recommend this stock, they pay you. By law, they're required to disclose it, but they don't always do. And I'm sure I'm not the only person that all of you listen to. So if you have your favorite influencer, whatever it is, make sure you ask them, like, hey, that recommendation that you've made on this stock or crypto, are you being paid for this? I think you'd want to know. I mean, I'd want to know for sure. I definitely want to know. Next, we put out lots of free content. I've got the Baldman Speculating podcast on Spotify. I'm on YouTube now. The Substack goes out daily. And in fact, Dan and Dean are incredible, wonderful, amazing team members, are starting their brand new podcast, which is called, let me grab that up. Let me get it. My internet is slow today. What is it called here? Let me just put it up. It's called Wealth X. I just got to straighten my desk here. Got a lot of crazy stuff. Let me add the share screen. Yeah, that's Dan and Dean in response to all of your comments, and by popular demand, they are responding to your request for more content created by them. So, hey, WealthX is their podcast. I'm not involved. They came up with this idea completely by themselves. They're out there. Please go support them. Please go listen to them. Please go give them your feedback. Please go praise them. So that's additional free content that we are putting out from ATG Digital. Next, social media. I am on X, pretty active. I was pretty active yesterday. Instagram, Facebook, we are there. And then, of course, if you would like a subscription to ATG Digital Media, they are monthly subscriptions. You can cancel. There's no canceling once you subscribe for a month. Yeah, you've paid it, but there's no, you can choose to auto renew if you want, but you're not defaulted into that. In other words, you keep your money. It's a monthly subscription. We're modeled on Spotify, Netflix. It starts at $9.99 for the cheapest tier, which is our silver tier. And if you like the kinds of ideas we focused on, you kind of like the guidance that we do, you like our way of thinking about the world, which is from the perspective of like a human being, rather than, hey, I need to analyze this business and get it right. I need like all these 62 indicators. No, we just like try to talk and think like human beings, right? We're subject to huge emotions. We often, subject to wishful thinking, but that's us, right? I mean, we're human beings. All right. But yeah, WealthX. Yeah, I mean, go to the Substack, sign up, and it will show you how you can get there and what you can do to follow them. But this is in response to lots of you asking for Dean and Dan, Dan and Dean. They could be a musical group, truthfully. All right. Um, First up, um, what's going on? Why are we like having like this incredible like up and down variability in? Let's start with the stock markets, and then I'll go to crypto. Why are we seeing that? Well, if you read social media, it'll say it's because of Trump, it's because of tariffs, it's because of, I think those are the number one and two things. And my view is this, which is that we have been essentially on a government spending driven, like kind of like mini boom that began with COVID and all the stimulus that was just pushed into the market by the central banks, then by the government spending. And for the first time, that spigot is being closed. The Federal Reserve sort of like was the first to close the spigot by raising interest rates, and now the government is doing it. And with that, a lot of companies, the size of the spending from the US government was extraordinary. It's in the trillions of dollars. So, yeah, pretty much every major business got some amount of money. And that obviously fed its way through the economy. It's now 5 years since COVID, folks. 5 years since COVID. 5 years. 5 years. And in that time frame, we have skyrocketed our deficits by some crazy number. I won't give you the details because all of you are regaled with all these details all the time. But bottom line, we are finally tightening the purse strings, and there's less money flowing into the economy, which means there's less money flowing into the markets. It also means that the things that people use to judge stocks, whether it be sales, whether it be earnings, whether it be cash flows, they're beginning to do this. They're beginning to do this. You could say, in hindsight, it was a bit of a sugar high. But like, hey, that's what we chose. That's what, us as a country, we wanted, and we got it. The government spent a lot of money, supported the economy for a long period of time, and now we're sort of like, the spigots have been turned off. And with that, what we are seeing is, there's just not as much money to come in and hold markets at very high levels. You know that I have been saying this for the better part of 12 months, which is that the very large stocks in the S&P 500, the very large stocks which dominate US markets. I did this in a YouTube, and I showed people that something like the top 10 names represent 35-40% of the index. You can do that then out to the first top 50 names, which get to like 40 or 55%. In other words, a very small number of stocks are what holds the S&P 500 up, and it's true for the NASDAQ 100. Those stocks are highly priced, highly valued, overvalued, over-owned, and they're ripe, again, for profit taking. They're ripe for people to take their profits and move their money elsewhere. And that is what is exactly going on. Yes, definitely on the like people can point to Trump's tariffs, but the truth is that tariffs have been around through this entire time. It's just that generally the tariffs were applied to the United States, not by the United States. Almost every country applies tariffs for their agricultural products or for whatever specialty goods they produce. They protect those industries. We are finally doing it. Why? Because we have this extraordinary, enormous, multi-decade deficit where the world buys nothing from us, partly now because we don't really make that much. And they have set up their entire economies simply to sell to us. It's not long-term sustainable, and it has also gutted our ability to produce and manufacture things. It's also gutted our ability to have a supply chain for important industries, everything from space to making cars to making anything of any significant size. We have to depend on somebody else. And we found out during COVID that that was a bad position to be in. We do not want to be at the mercy of China. We do not want to be at the mercy of other people. We want to be on some level. We can, we can definitely have trade, but to be completely dependent on other countries, yeah, I mean that's a bad position to be in. So at some point in time, yeah, this extreme, you're going to have to do something. And of course, you can't change something without there being some pain. And that is where we are. So there are definitely industries that are going to be affected by tariffs because as you know, company after company in the United States push their manufacturing to China and other places, they are, exporting things back to the United States. Those exports now will come with a tariff. What's the alternative? Well, they can choose to manufacture in the United States, then no tariff. So the downside is in the short term, yeah, I mean, let's say you're a company and you're producing in China, you're like, well, my costs are going up and I got to put these tariffs on. But if you move your production over here, now the tariff goes away. So the growth side of the market is going to be in the putting the production in the United States. So as that company moves their production, let's say from China to the United States, it's got to, get some land. It's got to put up some kind of a building. It's got to, buy a bunch of machines and put it into there. So it will probably take, I'll say on the short side, 3 months, on the long side, 6 months, but we are going to start to see like a boom here, a reshoring boom, a manufacturing boom, a production boom, a blue collar boom, if you will, of making things. It will get going slowly, but then it will keep building and it will keep building. And we have some early signs that this is what is unfolding. So you can't always believe the prices and the sentiment that it drives and the emotion that it drives or whatever it is that the media throws at you every day, right? I mean, we are all creatures of price. We are all creatures of emotions, right? But information, the nature of information is that information has very little emotional stimulus. It'll make you feel anything. And oftentimes because there's no immediate reward to getting this information generally leads to some opportunity that takes a while to play out. It doesn't play out like instantly like that. So nobody really focuses on it. But I saw something show up, and it is, continuing confirmation of what is going on. I put this up the other day, and let me quickly find the other story. There's two elements of it. Where is the factory boom story? I just need to do a quick search here. Well, let me put up the first one, and then I can find the second one that's out there. Let's see, where is the factory boom story? But this is the one that got my attention. This is not it. Okay, I lost the page. Give me a moment to get set up. Okay. Let me show this. So we see signs of this in here, which is that this is from Wall Street, who is a really good, but a little dour analysis sometimes, which is that the demand for electricity is taking off. And this is after a very, very long time. I mean, you can see here that you can see on this chart from 2007 to 2021, yeah, I mean, we really didn't go anywhere. But now we essentially have a breakout in the amount of electricity that we are generating, and the nature of utilities and them generating power is this. We're just like, they don't put up new generation plants unless they are really, really sure that there is a long-term demand for it. Why? Because, well, I mean, A, they cost a lot of money. Second, it's not like, these are not small things, right? This is a large capital allocation, and, they capitalize it over 20, 30 years. So why are we suddenly needing so much more electricity? I mean, well, part of it is artificial intelligence and the server farms, cloud computing, EVs, but part of it is also that we are now slowly moving production back to the United States. Now, let me search from Wolf Street itself. Um, um, uh, there was a story which I put up earlier about the factory boom. Now, let's see, where is his search? Let's see, where is this search? Does he have a search button? I don't see a search button, which is unfortunate. And I think the factory boom story is sort of like somewhere in there. But the other part of the electricity story giving you a tell as to where the market is going to be going in the next, I'll say, yeah, in 2025, is electricity rates are also going up. And that means that there is more demand than there is supply. And that, yeah, I mean, the reason why they can charge more is that people are willing to pay more. And you don't get a big jump in electricity rates without people, yeah, needing that, power. So you've got a major tell here as to telling you as to what is going to happen in the markets, what's going to happen in the United States. In other words, we are setting up for a reversal of the globalization trend that has been in place for like nearly 50 years. We are bringing back production and manufacturing from various different places. It is necessarily going to require change in terms of what we're focused on as a country. It is going to drive development and um, growth in different parts of the country. Under globalization, it was mostly the coast that benefit. Under this, we should have more even economic growth, especially in all the places that got gutted by globalization. And equally, it also means that different parts of the stock market are going to benefit. It is not going to be the stock market that we've had over the last 3 or 4 years, and is not even going to be the stock market that we had from 2009, till like 2021, when we had very low interest rates, which stimulated a lot of risk taking, and where a lot of very speculative investing, trading was successful. It's going to be quite different. I'm sure there will be speculative excesses associated with this market, but it is going to be different. And new companies are going to benefit, new industries are going to benefit, new sectors are going to benefit. And as this unfolds, of course, it can't be that the markets are going to sit still, right? They're going to sell one thing, and then they're going to hang out in cash for a little while before they go buy the next thing. So markets don't work perfectly seamlessly, which is like, hey, we know what we're going to sell, and we also know exactly what we're going to buy. No, markets are a bit messy. So, but I believe that between the factory boom that I think I put it up last week, electricity consumption, electricity rates, you're getting a huge tell as to where the economy is going and where the markets are going to be going. And what we are enduring through right now is this this shift that is going on. It is obviously disconcerting, uncomfortable. And I think one of the things that many people are going to struggle with is that a lot of people have gotten bullish on essentially the old bull market that is effectively going away quite recently. Because the nature of human beings is that we are excited by price. And after staying out for whatever, 10 years, 15 years, a lot of people warmed up to the S&P 500 and the big tech stocks probably around 2022, maybe 2023. And as I like to say, good news and high prices, they go together, but that's not how you make big money. I mean, you make big money by actually finding low prices with new information that is not discounted, not anticipated by the market. You buy those investments. That's how you make big money. So let me just make this tangible. Are we going to have a stock market crash? No, we're not going to have a stock market crash. Why? Well, partly because so many of you have just recently just entered markets after staying out for the better part of whatever, 5 years, 10 years, 15 years. In the vast majority of you, I don't necessarily mean you, the people that attend this live stream, but I mean the general American investment public. They're not ready to give up. They're not ready to give up on the S&P 500. They're not ready to give up on the big tech stocks and the Mag 7, etc. So that means that, what we're going to have is, I believe, a period where the S&P 500, and especially the stocks that dominate it, and I'm not talking about every single stock in the S&P 500, the big stocks that dominate, the vast majority of them will just do this for a long period of time. And all the big money is going to be made by much smaller stocks that benefit from a new environment, from a new trend, from a new trajectory. And there will definitely be periods when there will be high excitement, like we had after the election, where everything was pumped up, and then you'll get this, which is why, well, because people already own too much of all of that. I mean, and so at high prices, the folks that have been long and own all these companies at 20 times earnings and 30 times sales, and for companies that are growing by 2 or 3%, they are selling. And when they sell, they drop prices lower. Some number of people, I mean, retail investors will think this is a bargain and buy, and I would tell you, don't be one of them. Don't be one of them. I mean, yeah, if I'm right, I'm not guaranteed to be right, but I mean, I was bullish in 2009, right? And I was bullish pretty much all the way until about 2022, when there was this, huge, we had this little mini crash, and then the mini crash ended because retail investors, the American public, they're all in on markets. And the history on people being all in on markets, regular investors, retail investors, is not good. They tend to get in somewhere near the top, and they tend to get out somewhere near the bottom. So we're not setting up for a crash, but we are setting up for a period when most people own the wrong things to make money. The world's going in a different direction, right, as they just bought into what has gone up for the last 15 years, right? In other words, backward-looking rear-view mirror investing. Now, smaller companies, innovation companies, growth companies, companies that, actually have a wide, long runway for growth, nobody really loves those companies right now. Nobody. We do. Why? Well, these companies are young. They are setting up to replace the old incumbent legacy companies. And most importantly, they have growth. Many of them, also have growth as a result of this shift in direction, in terms, this macro shift in direction, which is we are going from a hyper globalized world to a less globalized world. I don't think globalization is going away, but we definitely, as a priority, want to manufacture, want to produce, want to create more things in the United States. And we want to rebalance world trade in that direction. That is definitely going to have winners and is have losers. And you have to invest, again, thinking about the future. And I know that in this hyper politicized environment, people are like, Paul, you're a jerk for thinking that. You're a crazy Elon loving puppet. All right, I am all of the above. What else we got? Uh, Either way, you can enter the world and deal with facts and information, or you can deal with it through emotion. But one way or the other, the world doesn't really care. It's going to change, and you got to change with it. It is what is going to be. We've gone through a 50-year period in one direction, and there was a lot of money to be made in that direction. And now, we're going to go in a different direction. And the nature of the vast majority of like people who do what I do is that they will be most bullish generally at the top, and they will be most bearish somewhere near the bottom, right? I mean, in 2009, I mean, I used to work obviously in the newsletter business, and I can tell you that when I first joined my first newsletter, yeah, I was in 2011, and I worked for this guy. I won't name him, and he after talking to me, he said, "You're bullish?" I said, "Yeah, I'm bullish." This is 2011, right? And he said, "Why?" I said, "Prices are low, expectations are low, valuations are dirt cheap. Nobody's anticipating anything other than some repeat of the recent past, which is whatever, the crisis and the crash, etc." And he was like, "That's crazy. I don't think you're right. I don't know if I support that. I think you might be doing people a disservice by being this bullish and all this." But that was obviously like a great scenario time to be bullish. So equally at the top, nobody really wants to be told that what they own is, yeah, high price, overvalued, overowned, and that, yeah, the best places to be are somewhere else. So take it for what you will. This is my opinion. It's my view of the world. You're not guaranteed anything, but I see it as my place to tell you what I think, and then you can choose with it, do with it what you wish. Just do what you wish. Now, one of the places that I am still very, 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 very bullish, very optimistic, very positive about is crypto. All right. And the basic reason for this is a new market. It's a new market. For all of the nonsense that gets battered around about crypto, the truth is that the vast majority of people don't own crypto, or if they do, they own it as a kind of a joke, as a kind of like a token of like, okay, fine, you crazy people keep talking about this stupid Bitcoin and this Ethereum, like what kind of a name is that even? I mean, it's essentially like air, like, like this is all crap anyway. In other words, it's not really taken very seriously, and the entire crypto market is worth $3 trillion, right? Which sounds like a lot of money, except that the asset markets of the world are worth something in the range of 700 trillion. 700 trillion. 10% would be 70 trillion, right? So, yeah, I mean, this is a very new market. There's very few people in America on a global scale that own it, and so there is, for I will say at least a decade, huge new incremental demand that can come in, and as that demand comes in, they will bid prices higher. Now, it doesn't mean that in any given day, week, month, or even year, that the prices cannot experience a crash, cannot experience a decline, cannot experience a down period. Still, you want to look at the world through a human lens, right? which is that if you don't own something, what are you inclined to buy, right? The price of something that like keeps rising, and you watch your neighbor, your brother, your sister, your friends, and they're like, damn, that buffoon, that person who knew nothing, all they did was buy Bitcoin, and they made money. They bought that thing that can't be pronounced, Ethereum, and they made money. Yeah, I mean, eventually we're going to see waves of people succumb, capitulate, and go and buy crypto. And when they do, what will they buy? Well, they will buy the big one. They will buy the big one, Bitcoin. They will buy Bitcoin. That's the obvious one. Like no different. Like I remember talking to people in 2022 who are like, Paul, you know what? You've been right this whole time. I'm going to buy in. I'm going to buy Apple. And I said, oh. And I said, why? Well, they said, well, that's the biggest stock. That's the one that I know. And that's, so the nature of human nature in markets is that they will gravitate to the most popular, to the most known, and the one most talked about. And that is Bitcoin. People go for Bitcoin. And they will come to buy as prices go higher. But there is, at minimum, a decade of demand. I'd say likely multiple decades, but that's not within anybody's time frame. So it's not worth talking about, right? But I'll say even over the next 3 years, 5 years, 7 years, if you don't own Bitcoin, you are going to, in my judgment, regret it, because it will get to some crazy number that just seems unthinkable today. No different than, yeah, in 2010 or 2011, the idea that Apple could be a $3 trillion company, if you even said that escaped your mouth, you would have been stoned. You would have been stoned. I mean, even if it was going to take 15 years, the idea that Apple, or even the idea that the United States markets would have 6 companies that each had $1 trillion market capitalization, yeah, you would have been derided as the dumbest, idiotic person on the planet. And yet that is what happened. In other words, we are very focused on right now, and we are very focused on what has happened. But when it comes to investing, you got to look forward. And this is where the problem begins. When we look forward, we got this: a blank sheet of paper, thin air. There's nothing. You got to make assumptions about the world. You got to look forward and visualize some scenario, something that is going to happen, and you got to make some bet on it. It's, of course, much more comfortable just to focus on the present or to look backwards, but the big money is all made by looking forward. It's made by looking forward. So when I look forward today, I'm bullish, I'm optimistic, I'm positive, but I'm not BOP on the S&P 500. Other than Tesla, I am not really BOP on the big tech stocks. Why? Because, well, after 15 years, most people own that, either through the S&P 500 itself, through 401k plans and all these different things, or else they have gone in and started to buy themselves, most likely in 2022 or 2023. I doubt the vast majority of people were buying it before then. I know, because I mean, I think I've recommended a lot of these stocks when I was at various different newsletter publishers, and I can tell you pretty much across the board what I got when I recommended them was derision, ridicule, mocking, people telling me that I was foolish, that I didn't really understand, etc. So, I mean, I have a good sense of what people were willing to buy pretty much from 2009 till about 2023. 2022, 2023, people that have definitely come in and gone in and bought into tech stocks, believing, all kinds of different things. But either way, that's not where the bull market is. That's obviously my view of the world. If you do want to know where we see the market going, where you will wish you were in a few years, right? Because we tend to look forward. We are looking forward, right? You want to invest today in where, you like where what's it? In 7 years, we'll be in 2032. In 2032, looking back in 2025, where will you wish that you put your money, right? There's no real answer to that, right? You got to have like some viewpoint on the world. You have to have some idea that like, oh, a certain technology is going to dominate, a certain technology is going to become big. I have a pretty decent track record on doing this, right? Right. I mean, at Banyan Hill, what was my first look forward technology? Internet of Things. After that, it was blockchain. After that, it was artificial intelligence. After that, it was, what were the others? Um, I think new energy, space. Now, obviously, not all of them, have worked out, but I got some right. I got some of the big ones right. So I have a track record. It's not perfect, but I've gotten enough of these right that I was like, hey, when I look forward, I've talked about this, which is like, where are we likely to see the biggest gains? Well, it's going to be in new trends, right? And on a macro basis, the big new trend is deglobalization, unglobalization. That's a big new trend. And what is going to benefit from that trend? Well, it's, in my judgment, in my opinion, it's going to be essentially companies that produce machines that help us make, manufacture, and produce things. 3D printing is an obvious one. There are others, but that's really, really obvious. Another one is the continuation of this, extraordinary technological like innovation curve that we're on with it when it comes to artificial intelligence, robotics, and generally just the use and the application of technology, which is spread out, and we'll get benefits in many different industries from it. Thus far, the stock market has mostly put all of that market capitalization into 5 or 6 companies, but you got to imagine it can be spread out into a lot more companies. So innovation and growth, and that is going to be across different sectors and industries, but we are going to see a lot of small companies that use and apply, and that's the word, apply these new technologies, whether it be artificial intelligence, robotics, which is very early. All of these things, as they're applied, they can create an enormous amount of value. And those stocks are not high, not overvalued, and they're barely owned. And almost nobody owns them, partly because they're so small. They're so small compared to these mega cap tech stocks. So, I mean, as demand comes in, they will push these stocks higher, and we will have, I think, a bull market that lasts, I'll say, a minimum 3 to 5 years. More than likely, it'll be a full cycle of about 7 years. And then the last place, where you can find opportunity, and this is the opportunity part of growth and innovation, is again in surprising places. Like, we found one place, Fannie Mae, those stocks, etc. And today, the surprise is like, is that international markets are suddenly like, there's, like all the European markets are making new highs. These banks in Japan are making new highs. This is a surprise, right? Because everyone knows the story. I mean, like that decrepit Europe with all their crazy problems. Who'd want to invest in it? Yeah, except that, remember, low prices and bad news go together, right? Low prices and bad news go together. And low prices come about not because people are buying, but because people are selling. So after 20 years of underperformance in international, we're suddenly seeing money start to move there. And as even fairly small amounts of money are moving there, they're bidding prices higher. And this is the beginning of a of a definite market trend, and we're going to participate in it. We are going to participate in it. All right. So, bottom line, I am BOP on crypto. I think people who do not own crypto will regret it. Just bottom line. Bottom line. From there, reshoring, unglobalization, deglobalization is a huge multi-decade trend. It's a bull market where, for the most part, it's really been at a business level. Like we can see, like, the number of factories going up in the United States, but we really haven't seen big stock winners yet. But that is coming. That's going to be one of the biggest winner sets looking back in 5 to 7 years. General innovation of various kinds, whether it be artificial intelligence, robotics, eVTOL, so many different new technologies that have an actual utility. That's another bull market. And then finally, international. This is where I would be. All right. I see a lot of comments here. So let me get going. Let me get going. Kevin, good afternoon from Lakeland. Good afternoon to you, sir. Progress Investors, Sha-na-na. I actually remember that show. That theme song was really, really catchy. The guide is in. How are you? Thank you for attending. Always wonderful to see you. Hugo there too says, hola, hola, and hola back to you, sir. TB commenting on my sartorial choices. Thank you. Oh, my pocket square fell down. I was really making my point so heavily that it fell. I'll just like readjust that. So I'll look stylish again. Dalapa says, thanks for your hard work. You are welcome. I truthfully am happy to serve and happy to provide a perspective and use, especially to regular investors. I do not think that legacy media is your friend. I do not believe that what they put out is there to help you. It is there to primarily garner clicks, to sell advertising. And a lot of social media, truthfully, is just poorly informed. Bashar says, thanks for sticking to the same time. At least the live is consistent. The market is not. Thank you, Rashad. Regular live stream listener. Love the down days. Time to go shopping for stock deals. Yes, but I have some guidance on this. Just to remember, like, don't go all in all at once, right? Yeah, I mean, when the markets are going to be up and down, there are always going to be periods when there are going to be low prices. Just always understand that where there is a seller, there's usually another seller after them. And so always just have a plan. As I like to say, buy low, buy slow, start small. Buy low and go slow and start small. Miss Puppy Pup says hi and says hi to my mom. Nice to see you, Miss Puppy Pup. I just want to say that my mom is so stoked that all of you say hi to her. So, she is a very loyal watcher and is like a mentor of very common sense things. Like my mom, is the one that said, like, well, stocks go up and down. Or when I say, like, oh, this thing didn't happen, she's like, you'll find another one. So my mom is always very cheery, very optimistic. TB says, blah down million plus from highs, yet I'm buying still. Yeah, just make sure that what you're buying, you are looking forward. Yeah, you are looking forward, right? Just remember that the media and social media will always be focused on what is moving up and down. But in a dealer run auction market, right, they can move prices higher to get your attention. And that is not accidental. That is on purpose. If they own some merchandise inventory that they want you to buy, how will they get your attention? I mean, putting out facts, putting out evidence doesn't really work. getting a really great story. Oh, AI is the greatest thing, and then accompanying it by a jump in price. Yeah, people are in. So inform yourself about what you are buying. Act like a stock or a crypto is an actual investment. You would never just go throw down money to buy a house. You would investigate the neighborhood. You would check out the house, have it inspected, try and build that kind of a viewpoint into buying um, stocks. David, who actually knows my mom's name. Susie isn't here yet. I think my mom, I did see her down there. She's in there. Mom, lots of folks saying hello. My mom is by herself, so saying hello just totally makes her day. So thank you all for doing that. Really appreciate that. Progress Investors, recent ideas from Dan and Dean include IRTC, which is, let's put these up here, which is iRhythm Technologies, which is a heart device company. Then there's DoorDash, which is DA, which is becoming increasingly the biggest delivery company. And then there is the controversial Tesla. The stock has essentially given up the entire election pump, and people are, complaining about Elon's politics, this, that, and the other. I would tell you, just remember, Elon was loved by the same people that hate him 5 years ago. 5 years from now, it'll probably be the reverse. And 5 years after that, it will be the reverse on the other side. Warby Parker, they make, okay, these are not from Warby Parker, but I have all these wacky glasses, which are for thumbnails, because as an influencer, I mean, these kind of go with the blue, I think. What do you guys think? Anyway, they sell glasses in between people aging, glasses as a fashion accessory like this. Yeah, they're doing pretty well. They're doing pretty well. Birdie, hey Paul, happy Tuesday. Happy Tuesday to you as well. Happy Tuesday to you as well. And there she is, my mom, star of the show, actually. Hi, Mom. Thanks for joining in. A lot of people saying hi to you. Progress Investor says, loved your interview on Milk Road. Thank you. Let me actually get that up in case folks don't know what Milk Road is. This is a big time crypto based podcast and newsletter. They were kind enough to invite me on, so I'm going to plug them. Oops, there we go.
Good morning. Welcome to the Milk Road.
Mute that, but Milk Road is a big time crypto newsletter. They've got a big following on X, and they had me on here, where yeah. So
GM, good.
What do they title it as? Let me see. Yeah, I'll put the thumbnail. They titled it as, they put out so much stuff that it's hard to, crash then pump 77K. So this was right at 85,000 or so. And then Bitcoin crashed to about 78K. Then we had the crazy happenings of this weekend where it pumped up after the Trump posts about the strategic digital reserve and buying XRP, Solana, and Cardano, but no mention of Bitcoin and Ethereum. Then he corrected it, and then the whole pump just disappeared. It's one reason why I was like, I don't really believe in like pumps and all these things, because they always fade out. I mean, it's good fun, I suppose, but they always fade out. But check out Milk Road, folks. They got good information on crypto. They're always interviewing people. And Jay, who is the host of the podcast, is a really sweet guy and very good, and gets a great interview out of people. So definitely check them out and support them. By the way, just to be clear, they have not paid me. They invited me on. I think the least I can do is plug them for having me on. Miss McFly says, thank you for willing to be a voice of reason for us, Paul. I appreciate all you do. Looking very svelte today. Thank you very much, Miss McFly. Appreciate it. The Guide to Sin says, thanks for calming me down. LOL. Yeah, I've always had this thing where, like, into a crisis or chaos, I generally tend to get calmer. I generally tend to want to think slower, and just stop and consider, like, okay, does this really make sense? Are my emotions carrying me? Is there something more I should think about? Do I really need to act on this right now? And the answer is, I can tell you, at low prices, the desire to sell is irresistible. Equally, when prices are just going up, that FOMO is irresistible. And if you can simply find a way to do nothing at both of those points, generally you're going to be pretty good. Like, if that's all like you focus on, you're going to be pretty good. TB says, I have the opposite problem that Buffett, not hoarding cash at highs. That's the biggest thing I want to work on. When it's feeling utopia, take larger chunks off the table to prepare for a new downturn. Look, I mean, the truth is that selling out is really tough, right? It means you're capping off, all the things that make you happy, which is like, oh, if you have a stock and it's going up every day, right? If you sell it, now when you wake up in the morning, you don't have that to look forward to. So the psychological and emotional cues in investing are an absolute minefield, and we're so completely internal in how we go about it. And I will say, which is that if you start to think about it like a dealer, the dealers don't wait for the peak prices. They are selling some of their stocks out. As long as they're making money, they'll sell a little bit. They might buy some back to manage their inventory, but they act like stocks are a piece of merchandise. Imagine if you were selling shirts. Would you sell all of your shirts at the very peak? It wouldn't be really possible, would it? So, but you would, if it was a shirt, you'd be like, well, I got a 10% margin here. I'll take a 50% margin on this one, a 70% on this one. And yeah, the last three, I made 100, 120, 100. Now, you're not like completely focused on, I got to get the top. I got to sell the whole thing at the top. So I would say that that's like, imbibing that way of looking at the world, which is like, you don't need to keep the whole position to sell at the top. Sell some on the way up. If that's, you want to keep some cash on the side, sell some on the way up. You don't need to make the most amount of money on every single trade. It's okay. Progress Invest says, was the drop in cents mainly due to its earnings report on the 28th? No, I mean, this is a tiny stock, right? Let's put up Senseonics. One of the things that I keep telling people, which is that companies don't move at the same rate of their as the same rate as the stock prices. We've had essentially a market correction where people are quote unquote de-risking, including selling off a lot of small stocks. Remember, it's a daily auction. today's price is not connected to yesterday's price. Yesterday's price was driven by different feelings, different emotions, different desires, different buyers and sellers. Today's is like, hey, the world's going to hell in a handbasket. We want out, right? So at the daily auction today, there's no buyers. Instead, there is a large seller who wants out. But our very natural way is to interpret everything through this lens that the media provides you, which is this is always about the business. It's about demand and supply, folks. It's about demand and supply. I mean, it was barely like what? 3 weeks ago when perfect people were perfectly happy to buy this at $1.40. Now they're willing to pay nearly 50% less. The company has barely changed. They've just gotten approval for their Eversense CGM device. They are like in quarter 1 or 2 of rolling it out. But because the prices move every day, we're constantly looking for explanations that like are associated about the company. Well, the truth is that somebody wants to sell and they want out. They might have their own reasons. Maybe you might think like, oh, well, the company is something terrible. The thing is, like, the company has been working on Eversense for almost a decade, right? It is not magically going to change its tune, be like, oh my God, the stock is down 20%. Let's trash our inventory of Eversense continuous glucose monitors. Let's give up on the rollout because the stock market decided to crash today. No, they're going to continue working on it. The company goes on unchanged. The stock prices change every day. And with that, people want explanations that like are related to the company. When it's related to the nature of the market, it's a daily auction that is run by dealers, and where, especially on small stocks, the average participant that is buying or selling is highly emotional, highly variable, and often has very little information. So that's what my opinion is going on. TB, I asked about Chama's take that Trump supporters don't hold stocks or real estate, and his take on going down longer. I read the. Let me put that up, and we can discuss it. Let me see if I can find the one that. Let me see, Chamath. Let's see. Oh yeah, this is it. So let's unpack this. So this is from someone who is comments on markets all the time. He says Trump is more popular with young people than old people. Most young people don't own stocks or homes, aka they are asset light. I don't think this is true. I'll say, sure, there are a large number of young people who don't own homes because homes in general, in most parts of the country, are not affordable, and they don't have 20% down payments to put down. I suppose that if you want to say don't own stocks in the same quantity as, say, baby boomers and Gen Xers, yes, I think that, yeah, as you get older and as you get past 40, 45, you have more discretionary income, and now you have more money to set aside to buy stocks and investments. So I suppose on a general basis, this has nothing to do with Trump. This is true in every generation. When you're young, you don't have a lot of money. Why? Because you don't make that much money, and the vast amount of the money that you make goes for your expenses. So I don't think this is necessarily specific to Trump. And then he says, Trump is also more popular amongst working class and middle class folks. This, I believe, is true. Most of these folks are also asset light. This is probably true primarily because of the fact that their incomes are much lower, and to afford investments or to have real estate, you've got to be able to save up a large down payment, and then you have to be able to make a mortgage. And if you do not have rising income, rising wages, it's very, very difficult to accumulate either one of those assets. He then says that it stands to reason that a fall in asset prices, stocks down, or home prices down have very little impact on his core constituents. I think this is BS. I don't think that asset prices are under the control of Trump. Asset prices are driven by demand and supply in the asset markets. Um, and so then he says, to that end, I won't be surprised if Trump has little reaction then to an equity or home price market correction. Uh, I do think that there is a mood in the country for us to rebalance the country. That, as I was, talking about in the initial, part of my commentary, which is that 50 years of globalization has benefited mostly people on the coast, and it has gutted and left behind large swaths of our population, largely in the middle. And those folks, I don't think they're asset light because of choice. Those are the folks that have not seen their incomes rise. Many of them also seen their businesses go to zero as their businesses were, essentially their product or services now being made in China. So to the extent that a lot of those folks definitely are Trump voters, they want change. They don't enjoy being poor. They don't want constantly to have only worse times to look forward to. That's probably true. Separately, the upside is shrinking these asset prices. I take issue with the idea that Trump is shrinking these asset prices. No politician wants to lower asset prices unless they can see it, as a pathway to something that is going to eventually lead to something better. Asset prices are driven by demand and supply, and we've got much bigger factors that are involved. Interest rates are a much bigger factor than politics. As an old mentor told me, interest rates are to financial markets and asset markets as gravity is to physics. You lift the interest rate up, you're essentially getting something for nothing. A 4% interest rate in a savings account is very attractive. You're getting 4% while taking no risk. Everything else requires taking risk. That's a much bigger factor than anything that he's talking about here. What else? Obviously, if house prices go down, yeah, various people that are currently outside of the housing market could participate. But the truth is that in many parts in the middle of the country, housing prices are not that high. You can buy a house in various parts of Ohio for $250,000, etc. So uh, I don't really think that a lot of this analysis is making the presumption that politics is the critical factor here. And I would tell you that demand and supply, interest rates, and also a multi-decade trend of globalization is as much responsible for what's being talked about. Tangentially, if Trump figures out how to get rents lower, he will unite young people. Well, it's very easy to get rents lower, get people to build. And we are seeing that. I mean, in most places where there has been lots of building, rents are getting lower and keep going lower. Certainly in North Carolina, we have seen a building boom since COVID, and rents are very reasonable over here. And that's true in some parts of Florida where they have overbuilt. So it's very easy how you get rents lower. You get lots of units being put up. Essentially, you get people to overbuild, which has happened in various parts of the countries. Finally, he said, don't presume that the stock market going up is a useful barometer anymore. In fact, it going down may be a better signal for his profit. I think that's bullshit. And I will also say that the stock market is what? I mean, there are 3,000 or 4,000 stocks. The S&P 500, people by common reference, is the stock market. But it's really just essentially what the S&P 500 is, essentially about 30 stocks. It's not the stock market. There's another, whatever, 3,000 stocks that matter. And in my opinion, smaller stocks that benefit from, all the things I mentioned going up, well, that will matter to people that are invested in those stocks. So I don't think I really agree with the vast majority of this take as laid out. LMFG says crypto market is just a little different than SOP. It's the technology that will change the world. Whereas what money's after. Yeah, I mean, money always counts. I mean, what Bitcoin is trading for dictates the liquidity in the crypto market. And if the value isn't there and if Bitcoin's not worth whatever $85,000, nobody cares. So I agree that to some extent it's true. David says it seems to me that an influencer who is crooked enough to take money to reco a stock isn't going to tell you the truth if you ask him or her about it. Well, it's difficult. It's very difficult to criticize somebody that is giving you money. That's true. I mean, it's Charlie Munger that used to say, show me the incentives, and I'll explain, what a person chooses to say and do, and that's very, very true. In other words, if a company was paying me, or if a crypto sponsor or token was paying me to recommend their token, could I really trash it? I could, but I don't think they're going to keep sponsoring me. So if I want to keep the gravy train going, I gotta, at the very least, be kind of nice and but polite. But certainly to keep an independent mind, you can't take money. As they say, his bread I eat, his song I sing, and that has always been very true. Guys, since I love that Dan and Dean are starting a podcast, and it's for you guys are like, hey, please ask them to make more content, and they have heard you and they are making content for you. Please go support them. Please listen to them. Please give them feedback. They are they are like have just absorbed so much. In his last 3 years, very eventful year, they've become very sophisticated as investors, and they have a lot of value to offer you. So please go and support them. Dan and Dean Block shot. It's hilarious. Help, I'm single again. We should have matchmaking being done in our chats. People can volunteer. My mom used to be a good matchmaker. Mom, you can get involved and put some of our live stream viewers together. I don't recall you mentioning HBAR, which is Hedera Hashgraph. I have been asked about this token a lot, and I don't find anything wrong with it. It's just that I have chosen to focus on tokens for the most part that have a very specific utility and purpose. Usually either it's the main tokens like Bitcoin and Ethereum, and then from there, it's where I've seen a token be used for a very specific purpose, like Avalanche for automobile titles, or else decentralized finance tokens where they are looking to replace certain activities in traditional finance, like lending and other things like that. But Hedera Hashgraph looks like a perfectly good token. It could do very well. The other thing I will say is that from my research, the vast majority of the value in every single market is captured by the biggest, the sort of like a handful. I'd say like 80-90% of the value really is captured by the top 5 or 10. So if it gets there, I'll probably like add it. But for now, my focus just really has been in tokens in the lines that I explained. LMFG says Hedera Hashgraph has too many NDAs signed with many companies, including SpaceX and Starlink. I mean, I'm open to researching things. People bring me ideas. I mean, last week, John, who is not here, mentioned American Semiconductor, and after I saw the electricity headlines, and after telling him, I don't know. I went and looked at it and I was like, well, it's one of the few small cap companies that's involved in electricity. And we actually added to the portfolio. So I will look into Hedera Hashgraph. I am not too proud, not too arrogant, not too full of myself, not to take suggestions, hints from you. So bring them on, bring them on, bring them on. Throw them at me. I may not listen the first time, but throw me evidence, throw me facts, throw me information and research. Alex says, hey, Paul. Hey, Alex. Good to see you again. Help, I'm single again. Why are NDAs a problem? I'm not sure, but my guess is that the idea that maybe they're spreading themselves too thin, I don't think it would be a problem. Like if they've signed non-disclosure agreements with SpaceX, Starlink, and they have 20 other potential clients, that would all be a plus for me, not a negative. That would be my view. Sue says, please talk about Palantir and NVIDIA and how Doge will affect the Palantir contract and the new chip restrictions. Is NVIDIA still the king of chips? We sold Palantir out of the silver tier at around a little under 80. And my view is that while I have no issues with Palantir as a company, I would feel like if it went from, I think at the peak when Palantir was $125 or so, it was trading for 103 times sales. Yeah, 103 times sales is a crazy, crazy high number. Truthfully, when we sold it was 70 times sales, and that was a crazy high number. So you can have good companies trade for very high valuations. Why? Because, yeah, again, I'll repeat that. There's a daily auction. And if a lot of people come with a lot of enthusiasm to pay very high prices, nobody is going to stop them. The dealer will happily sell it to you. And of course, that gets recorded in our accounts as gains. But 103 times sales, 70 times sales, 50 times sales for a company that is growing at approximately 25% a year. Yeah, it's a scenario where I'm like, I'm gonna sell out, and those folks who want to stay in and see how much more it can go, maybe somebody is willing to pay 150 times sales. Maybe the market, will find buyers that want to pay 600 times sales. I just don't want to take that bet. So that's why we sold. How will Doge affect the Palantir contract? I don't think they'll affect the contract at all. I don't think there's any issue with Palantir's business. The stock price is not going down because there's something wrong with the business. The stock price is going down because it got bid up to a crazy high in the short term, and there are plenty of people who are willing to sell and take lower prices. And that continues. They can lose no contracts. They can continue to grow at 30%. The stock price will still go down. So I don't think Doge has anything to do with the Palantir contract. New chip restrictions. We've been operating in a world of chip restrictions for 5 years. And none of this is new, and each incremental new restriction doesn't really mean anything. The market, once it gets like a piece of information, will incorporate that and think through, highly restrictive, less restrictive. So anything new on this is mostly like known. And I don't think it really doesn't change the thinking for somebody that's looking to buy or to sell. Is NVIDIA still the king of chips? I think it is, obviously the largest chip company by market capitalization. So it does have this designation. We have not owned NVIDIA, and actually I have consistently, when asked about NVIDIA, AMD, other stocks like SMCI, have said that semiconductors are a cyclical business. You want to buy them when they are at their bottom, when they look terrible, their businesses look terrible. Nobody wants to invest in them. And you want to sell them when they look like they are in rude health and when they have a lot of fans in the stock market. I think it's very clear where NVIDIA and chip makers are. They have a lot of fans in the stock market. This is a sharp contrast to when I was recommending AMD, ST Microelectronics, and all the chip companies from 2016 on. I am not a buyer of any semiconductor companies. I think the cycle has peaked, and you will see on average over the next 5-7 years, the lower prices and the nature of cyclical companies is that people tend to buy somewhere near the highs because everything looks so good, and they sell somewhere near the low where everything looks terrible. So we don't own NVIDIA. We will not be recommending NVIDIA. We don't own any chip stocks of any kind at all. LMFG says, no problem with NDAs, just should raise eyebrows. Projects going into them is my take. Yeah, I mean, crypto is so new. Very few crypto tokens projects are really good businesses. The vast majority of those are decentralized finance coins. And then we are yet to see, like, yeah, we need more adoption, more utility to come. Progress Investors ask, will WealthX be on YouTube or somewhere else? Best way to sign up and subscribe to the podcast. Well, let us see here. I am ashamed to say that I don't know. And if you click on it, it doesn't actually say. And B is not on, so I can't tell you. If you subscribe to the Substack, which is here, you can ask Dan and Dean questions, and they will communicate to you what it is. Or yeah, that would be, I will tell you, the easiest way to find out. I'm just going to keep putting this up and plug it so everyone's aware that they're starting this. Oh, here's B. The WealthX podcast will be available on Spotify, Apple, and YouTube. More information coming soon. Thank you, B. Appreciate you. So there you go. That's the answer. TSM's 100 billion U.S. chip manufacturing buy signal. Again, I would tell you, when you go to buy a stock, focus on the demand and supply for the stock. You can have all kinds of positive news, but it may not matter to the extent that people have already bid the stock up, and any news is just incremental unless it radically changes the demand and supply equation for the stock. In other words, the business is going to do so well, it's going to bring so many new buyers. I'm not a buyer of TSM. I'm not a buyer of any semiconductors because, like I said, in my opinion, the cycle has peaked and you're going to see lower prices for a long time. Harlan Bauer says 3 to 6 months to buy land, build a factory seems a bit aggressive. It takes a long time to find land and to put up a factory unless you've been planning for it. It depends on the scale of the factory, but the 3 to 6 months, what I was saying, for the market to start moving. Remember, markets don't always wait for like actual things to happen, right? I mean, look at how many stocks in our markets are based on essentially just purely intellectual property. Most of those quantum computing stocks, they don't really have a genuine business, but markets are willing to look forward by 10, 15 years and price that in. So we will see activities like that. Philippines and Dubai are launching their coins on HBAR. It looks like a vote of confidence for me. Yeah, it might be. It might be. We'll have to see. I mean, if the buyers in the current crypto cycle want to bid up coins like that. I mean, we've essentially in this cycle seen a small period when pretty much everything was up. That was like in March of last year. And we've had a Bitcoin mini bull market. Then we've had a mini meme coin market. So we shall have to see. Control F is how to bring the search field. Yeah, I think that would do it for my computer, but it wouldn't do it on that website. How about the new Trump ETF? I don't think I would let Trump pick a stock ever for me, but Paul's 100 ETF will be way better. Let's go. First of all, I just want to say, Liz, thank you for your positive attitude. I really appreciate you joining in. Always love your spirit. And I said this on the Milk Road podcast. Don't get down, folks. Don't get down. Right? Don't let any single day, some single price get you down. We're still in an incredible time. It is an incredible time to be alive. We've got all of these things that essentially are like magic, right? I mean, all the things we can do that were like ridiculous compared to even 15 or 20 years ago that are now so easy. Yeah, I mean, we're very focused on, all the things that can be wrong and negative, but come on. I mean, we live in an unbelievable time, and there's, even more unbelievable things coming, and that will afford us extraordinary opportunities. So, yeah, I don't think I'm a buyer of the Trump ETF either. I don't think I'm letting Trump pick stocks or crypto for me, but we still hope to launch the ETF. I think we have something like $7 or $8 million committed. Hopefully, one day soon. Is nuclear a solid play on energy? I'm glad you asked because it is something that I've been meaning to put up. Let's see. Can I find where is the Wolf Street? Yeah, let me put this up. For all the folks that are ask about nuclear, so here's nuclear, right? I'm gonna just shut this down. So that green line, am I showing this to everybody? I am. Yeah, so the green line is nuclear. You'll see essentially it's gone nowhere. So I mean, I know that last year we had a big pump on nuclear stocks and uranium stocks, and that came, that was part of the AI pump. But the truth is that we have not put up a major nuclear plant in a very long time. And people talk a good talk about smart modular reactors, but we don't really have an approved commercial version of this that somebody is willing to put up 10 or 15 or 20 or 1,000 of them that would maybe make a dent in uranium demand. So is nuclear a solid player in energy? Not in my opinion. There's really no sign that we are in some nuclear renaissance. There's just no sign of it. What we can see is that, that red line is renewables. That's up and to the right. That's wind and solar mostly. Natural gas is a big one. Coal, of course, continues to go down, and petroleum is low. So, I mean, the data and information certainly does not indicate so. TB says, I don't really think Tesla belongs in Mag 7. It moves like a roller coaster, not like an Apple or Amazon. Yeah, I mean, I told you that the market is a daily auction, but not all stocks have a very committed dealer set. And Tesla, because it has always been more owned by retail, more owned by regular people, it is less moved around by dealers. Dealers will help stabilize the stock and support a stock at various levels if they have enough merchandise or inventory, because they know that having a stock drop by 20 or 30% is bad for business. It means that you can't sell stock into the market, so they will hold that price. Tesla has never been really much of a dealer-supported stock. It does move around like a roller coaster because that actually now reflects the fact the demand on one day can be completely different than the demand on another day, and is very subject to retail demand flows. Very subject to retail demand flows. Rashad says, do you think the crypto reserve proposal is missing transparency rules? I'm worried to see another Trump Libra coin. I put up this thing, which I agreed with, which is Um, I really don't think we should be anything other than Bitcoin should be in this in this in this in this reserve asset. I mean, uh, it is the only legitimate reserve asset. Why? Because it is independently issued. There's finite supply that is finite. That's not, can be finagled by somebody. And it's it's kind of like digital gold. It's a store of value. So I I did then after that also put up this post saying that there is a legitimate reason for why the US should perhaps buy some select blockchain tokens and keep it in reserve. Why? Because, well, if nefarious actors were to capture or control these networks and we put the world's financial information, we put, all of our property, everything on it, and somebody were to get control of it, then that would be problematic. So by owning it, you're able to control it to some extent, so that there is a legitimate case for that. But I still think, and I think the CEO of Coinbase and others have pretty much said like, yeah, Bitcoin should probably be the first, and then from there the bar should be really high. I think Ethereum would kind of make the cut. From there, it would be really difficult to say, because obviously, if the U.S. government is buying, there is going to be enormous temptation for people to use the U.S. government as exit liquidity to get out at high prices. Luciano says, "You are the best. Stay strong. We stand with you." Thank you, sir. Hang in there. Yeah, we're gonna win, right? I mean, we've got great ideas. We've got great thinking. We've got the right investments. There's always going to be down markets, but we're going to come back and we're going to win because this is just like an unbelievable time. This is a great opportunity, and we're going to win. David says, don't forget to smash the thumbs up button. Yeah, help us out. Hit the thumbs up button and subscribe to the channel and hit the notification so when I go on live, you know when I'm coming on. We've got free stuff. We've got a crypto chorus. We also have free things that are on the ATG Digital website, no charge. I really think it's important for people to be invested in crypto because it is the newest market. It has the most amount of incremental new demand, which all means that it also has the greatest upside. Like, imagine buying into the stock market, I don't know at what point, very early in its days when, like, the new inventions of the time were railways and telegraph. Right. I mean, that's kind of like, where crypto is today. So don't miss out, folks. Check this out. The Guide to Sin says, why are we buying puts in the platinum tier? Because if you look on a day like today, there is money to be made on selling. Here is the 52-week low list. And you can see here, if I sort this, you can see here, there are 774 stocks making 52-week lows, including Microsoft, AMD, Applied Materials, all in semiconductors, Synopsys, Cadence, all semiconductors. And then we've got oil stocks, ConocoPhillips, Canadian Natural Resources, Diamondback Energy. We got housing stocks making new lows here. So the platinum tier option side, for a long time, we never did puts, truthfully, because we were in a market where it was pretty much everything was going to be a winner if you gave it enough time. Well, we are no longer in that market. We are going to have winners and losers. And one of the best ways to know what's going to go down is to go look at the 52-week low list. That's what people are selling with conviction. Why? Because they don't want to own it. They own too much of it. It's whatever, overpriced, overvalued, and the future, as they can see, is not there. And so they are willing to take 1-year lows and dump out. And my research and my experience is that when stocks start making 52-week lows, especially when they're starting from a high point, you can see long periods of time where they will keep making lows. We see that, we think we can make money in this area. We have some understanding and research in it. And so we have put on puts on the housing ETF, oil, and then we've also have the semiconductor ETF, the leveraged ETF, where when we see these pockets where people are selling in a very big way, we just look to benefit from that movement. Renee says, do I still keep an eye on DDD? I sure do. In fact, I was looking at it today. And this is DDD today. I believe that this is going to be a very big stock in the future, along with Stratasys, along with Proto Labs, as part of this reshoring trend. I believe that 3D printing is the sort of like the signature technology that even in China, they make an extraordinary number of things using 3D printing. So this is one of the largest companies in the United States. And to the extent that companies are bringing back production here, they're going to end up buying a large number of 3D printers. Sparta says, hi, Paul, keep up the good work. Very much appreciate your knowledge and opinions. News on FNMA, FMCC, and a Tesla bottom. Let's quickly look at FNMA. That's the more liquid of the two. Here we are. That is Fannie Mae. There has been no news. Scott Bessent, who is the Treasury Secretary, said something that caught my ear. And he said that they were going to have some news coming out soon that would unfreeze the housing market. And I was like, I wonder what that is. Now, I don't know what that means, but there has been no direct news about Fannie Mae or Freddie Mac since the election. As I have said before, Trump is on record as saying he's going to free these companies. There have been rumors here and there that investment bankers have been sniffing around Fannie Mae and Freddie Mac, getting ready to sell the government stake or maybe to raise money. But this is all just scuttlebutt. There is no firm news. So you got to go back to the basic premise, which is that which is that they will be set free at, I would guess, in the next 12 to 18 months. And with that, the prices should go higher. Bill Corin asking about Senseonics. I actually dealt with this earlier in the podcast, which is that, yeah, you're seeing people sell stocks. It's a small stock that trades for under $1. Yeah, nobody's going to buy it today and people panic sells. You're going to have a 20% down day because what? It's like 20 cents will be a 20% move. So, yeah. There's nothing particularly special going on. Yeah, I think I should have worn these for Valentine's Day. This would have been good. I'll kind of like the shape. But thank you, the Guy to Sin. And Guy to Sin also says hi to my mother. Oh, there's the question about Tesla bottom, which I didn't answer. So John's on. And it says, hey, Paul, how do you see Tesla potentially going on? Tesla among 50 plus other positions. Thank you for the original recommendation. Tesla has become a core position of mine. Yeah, there's two view. There's, the viewpoint on Tesla, which is that, oh, Elon's hurting Tesla sales because of his politics and involvement with the Trump administration. My personal view is that uh, cars are a cyclical business, highly sensitive to interest rates. Second, they've had their biggest switchover in product with the Model Y, where they were essentially unable to sell the old models of Model Y while they switched over to the new Model Y. So that hit sales. Um, there is also in China incrementally more competition that there is, but it doesn't mean that Tesla is never going to sell again. Um, we will have at some point in time lower long-term interest rates, which will help them. The Model Y transition will be over. And then they're also talking about refreshing Model S and X. And the other big lever that they have is that because they are still like an innovation industry, as the production goes up, the per unit cost goes down, and they can cut prices and capture market share. This is the most powerful lever for any innovation business. So when will the stock turn around? Well, the stock pumped up after Trump was elected. I believe that was a short covering pump in hindsight. When are we going to see it? Well, if you go look at Tesla stock in the past, it has a very streaky kind of like track record. My throat is a little sore from talking, but let's actually put it up for 10 years. I mean, we got involved in 2018 and it went from 25 to 415, back to 100, made a new high, now 275. It is just volatile. But that blue line essentially is a 40-week average. Is there something special about it? No, it's just a long-term average to be like, what are prices going for in the daily auction on average? And that would say that there's not much downside remaining on this move. And at some point in time, we are going to start to see this reverse. I would say, it's almost come back, given back pretty much all of its election pump, which is about 275. I would think that this is at near around the bottom, and from here we'll see it base out for a little bit, and then into better conditions for its business. You will see more demand come in for the stock. That's my view. More people saying hi to my mom, much appreciated. Tom Tepper says, mankind issued their debt and issuing stock at $3.15. What are my thoughts? I'm a little confused, truthfully, with the share issuance. Why? I mean, I don't really know why they just wouldn't have issued the shares in the convertible, and why issue shares at 315 unless it is to solve the short squeeze that's created by paying off the debt. So this could be part of the agreement that they had to do, which is like they can pay off the debt, and they left 12 million shares that were like they according to their presentation they saved in terms of dilution, but now they're issuing shares. So it's a little bit of a confusing time. Having said that, the business is doing well. They have now just $36 million worth of debt. Hopefully the share issuance will be put behind it. But the most important thing we really need for Mankind stock to go up is that we need a better market for biotech stocks of its kind. And we're not there yet, because they've been seeing huge growth now for the better part of almost 2 years. And the market really is not that enthused. So what we need is more enthusiasm for biotech stocks to come and them to start bidding the multiple higher. TB says, great advice as always. Thank you. The short interest for mankind has been reduced significantly. Yeah, Tom, but that's the short interest was due to the convertible bond because a convertible bond is hedged by shorting the stock. So a lot of the short interest was due to that convertible. So that's the number one reason why it's gone away. NTLA, let's look at that. That is one of the biotechs we're in. Yeah, this is in serious struggle bus territory here. NTLA is, I mean, also just look at what's going on at the company. We used to own this a while ago. So here is, they announced their results. So they are still working on, yeah, I mean, they are strategically reviewing its business and prioritizing one drug. So, I mean, essentially, this has become like a one product bet, and it's to be determined to see if that's going to work out. The reason why the stock is going down is because, yeah, they the market for clinical biotechs is even worse than for biotechs like Mankind Corp. And it's probably, I mean, getting nearer to where, like, there's probably going to be some bounce, but we will just have to see what events happen for that one drug that they have retained. TB says, thank you for your time and answers. Liz says, I just rolled over one of my IRA accounts to Bitcoin IRA because I am a Bitcoin bullish. Biddy, very nice, Liz. Very nice. I have told people, which is that if you are lazy, don't want to invest in a lot of different things, Bitcoin genuinely does afford you for some limited period of time to just make like a one investment bet. I mean, I always say, like, you want to spread your bets, but Bitcoin is a bit like gold. So it is definitely a one-stop solution to kind of like, hey, where do I store my wealth? So it's definitely one way to go about doing things. Guidison says, cool move, Liz. Oh, why do the people on the coast benefit from globalization? Because manufacturing is mostly in the middle. Yes, that's correct. The vast majority of the kinds of manufacturing and production that was shipped over to China by companies from the United States. Remember, the companies continue to make it. They just moved the production over there because over the last 50 years, labor costs were much lower. Input costs of various kinds were much lower. And truthfully, the government almost encouraged companies to do that. So that's the part that was struggle. John says, "I'm here." Yeah, I noticed. I did take your suggestion on American Semiconductor. I'm still concerned that that company has been around, but with the electricity bull market taking off, there's very few companies that you can say are direct beneficiary capital spending of that market capitalization. So we have actually put AMSC into, I believe it's diamond tier. I'm here. And as work, need to see this video after you finish. Yes, sir. That will be available on YouTube. John asks, can you talk about Polkadot? I would like more information about this. You or anyone here haven't talked much about it. We own Polkadot in in the gold tier, and the primary reason why we own Polkadot is because on their platform sits real world asset protocols and platforms that have the potential to get wide adoption. And as I was saying, when I try to pick the tokens, I've been very much focused on realistic, like, hey, there's an actual use case, actual adoption that's possible. Why? Because as that happens now, it generates fees, and then the user has to own some amount of the crypto token to actually use the platform itself. But primarily from my perspective, it's that they've got a platform for, I'm trying to remember the name. I believe it's Wrapped Centrifuge, sits on the Polkadot blockchain. And so here you have, again, the potential for major adoption for something real. And that is the reason that we own Polkadot in the portfolio. Wolf is in the portfolio. Yes, it is, but Wolf is a play on EVs in the power control chips for EVs. What do I think of SGM? As I've said before, which is that I am not bullish on semiconductor stocks. I think the cycle has peaked. You do not want to buy semiconductor stocks when they are popular. You do not want to buy them when they look great as businesses. You want to do the opposite. You want to buy them when they are hated, when the idea of owning them is repugnant, and when they look like they are a step or two away from bankruptcy. They are in the opposite place right now. So that's what I would say. Bill Corin says, I just bought more. Very nice, sir. Please make sure to is it good to add more MSTX here? Well, let's look at MicroStrategy because we have not really looked at this. There was a lot of questions about MicroStrategy when the price was surging higher about 4 months ago. Yeah, I would think that there is the sentiment about Bitcoin, the sentiment on crypto is like death warmed over. It is true as well for MicroStrategy. I think you want to buy things when they are low, when the sentiment is low, when the potential demand from here can go higher and can bid prices up from here. We don't own this at ATG Digital, but I do like MicroStrategy, and MSDX is obviously a levered version of it. John says, thank you. That was an outstanding analysis. You're welcome, sir. What about AMD? The same thing is true for AMD as is true. It's a semiconductor company. Semiconductor cycle, in my opinion, has peaked. You do not want to own semiconductor companies or cyclical companies at the peak. At the peak, they look like they are incredible growth stories, not like what they do when they're at the bottom. But you want to own them when they are hated, when the idea of owning it will make your stomach turn, and when they look like they are a step or two from bankruptcy. That's when we bought ST Microelectronics. That's when we bought AMD. And that's how we made 500-600% on each one of those. T-Doc, I love this company. Held, sold, held again, make dollar money back, went back in. When should I pull the trigger? Well, I'm not going to tell you when you can pull the trigger, but I will look at a long-term chart of this. And as I say, bad news and low prices go together. But I have a friend who is a very advanced user of ChatGPT, and he recently told me the story. He said, I used to call my friend and ask him, my doctor friend, and ask him. He's like, I don't need to do that anymore. I just go to ChatGPT and put in my symptoms, and you know what? It gives me what he would have said. Well, that's Teladoc is the ChatGPT of medicine. So sooner rather than later, what my friend is doing, everybody else is going to be doing a little bit more formally with your doctor involved, with the records being updated as habit Teladoc is the most, and the biggest candidate to benefit from the implementation of AI in healthcare. So if you believe in AI and its use in healthcare, Teladoc would be a very solid play. Peter Moreno asks if what I said about all the semiconductor stocks applies to Intel. It applies to all semiconductor stocks. Semiconductors are a cyclical business, a very, 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 very cyclical business. At the top, they all look great. Everybody's like, look how cheap they are. At the bottom, they trade for 700 times earnings and they look horrible. But you want to sell them somewhere in here when they look great, and you want to buy them when they look like crap. And we are nowhere near them looking like crap. I know, because I put S3 Microelectronics into the portfolio at 6, and we sold at about 50. We put AMD, I can't remember, at 8, and we sold whatever, also at 55 something. Yeah, everybody today is crazy to buy chips. I can tell you, when I put ST Microelectronics in the portfolio, I got stones thrown at me. Nobody wanted it. People are like, are you really sure? Why? Because it looked like this. Now that it looks like this, everybody wants in. So yeah, Intel does fit that portfolio. FA says, thank you, Paul. And with that, another marathon live stream has come to an end. Well, we got one more. If Bitcoin hit 1 million, where do you think XRP could go? So Bitcoin hitting 1 million would be about 10x from the last peak. At 1 million, let's make this real. At 1 million, the notional market capitalization of Bitcoin would be 21 trillion. So 21, yeah. And I mean, let's put up some actual numbers here. Let's put up some. So we've got $145 billion is the XRP market capitalization, right? Let's look at how many coins are out there. XRP has a lot of tokens issued. The circulating supply of XRP is 100 billion coins. So, there are people that throw out these crazy targets for XRP, but remember, there's 100 billion coins out there. So my viewpoint is that XRP and Ethereum are comparable and could trade for similar market capitalizations. So from current prices, I think that, there's another, 80% upside for XRP to catch up to Ethereum. And from there, I would say each of these have, I'll say, Ethereum could go to $20,000, and XRP, I don't think would keep up at that rate because it started from a much lower price. But I think something like $12, maybe $15 is a reasonable price target, in my opinion, for a very bullish upside target for XRP. So that's my, I guess, putting up my finger and putting out there. All right, we are now done, I think, with all of the questions. I hope all of you enjoyed the live stream. 2 hours, 3 minutes, 50 seconds. And thank you all for also saying hi to my mom. I'll put up, subscriptions available at atgdigital.media. I see one more comment here from Liz. Finger red, number 1, text yellow, gold. I think that is supposed to be emojis instead. I'm seeing it as text. All right, folks. I'm gonna put up. If I end it on the comment, then that's what shows up. So I want to put the plug up. So that's the thing that the YouTube audience sees. Thank you all for being here on this live stream. Check out ATG Digital Media. Remember, Dan and Deed's podcast coming out soon. Thank you all. This is Paul saying thank you and goodbye.